The stock market is the great humiliator, and have we seen the market humiliate the bears on this Tuesday turnaround? Today is June 27, 2023, and we are going to be recapping the price action that took place across the markets. So if you like these videos, please make sure that you subscribe to the channel and also hit the like button for the YouTube algorithm. And if you find these videos useful and if you think that it could be useful to a friend, please go ahead and share it. I would greatly appreciate it. Now, welcome to the Option Trader Lounge, where we talk about generating income and growing your wealth within the US stock market using options. Thank you all for tuning in. Get yourself a drink, sit back, and relax. Now let's get into it. So Tuesday's turnaround really took place on Monday's sell-off. As we can see that Tuesday's price action across the board, we have the SPY here up 1.1%, the triple Qs up 1.72%, and the Dow Jones 0.62% up. The Dow Jones really just disappoints me. Year to date, it is only up 2.42%. The triple Qs is up 37%, and the SPY is up 14.5%. Also, we have the VIX that is down 3.58%, closing at 1374. So the price action that took place with the triple Qs, the triple Qs is more of a bigger turnaround considering the fact that we had a major move down on Monday. So right now we're looking at the weekly chart, but if we zoom in a little closer to the 15-minute chart, and what I like to do here, whenever I look intraday, I like to remove all the studies because to me, these moving averages don't really mean anything whenever you're looking intraday. They're more significant whenever you zoom out either to the daily or the weekly time frame. So Monday's sell-off, right, juked a lot of people because for the first 15 minutes, the market moved up, and then literally for the rest of the day, sold off, closing down at $357. Now, at this point, right, we had some price movement during the after hours time frame, and then come Tuesday morning, we hit a bottom of 358 and rallied all the way through the end of the day, closing at 363.83, giving it a 1.72% increase. Now, the after hours price action is currently down, but we really won't know what's going to happen until Wednesday. Now, coming on Wednesday, we have a lot of news flow that's going to come through. So that's going to give a lot of price movement and of volatility, especially because we have the Fed speaking. So Wednesday is going to be a big day. We want to really make sure that we are paying attention to this speech that's going to take place, right? We have the Fed Chair Powell speech that's going to be going on throughout the day. And we really want to make sure that well, at least for me, I will be trading after the Fed speech because what we're going to see is a lot of price movement and we won't get the true direction of the market until the speech is over. Because what needs to happen in the market is for traders and investors, especially institutional investors, to price in what the Fed is saying, because we are going to need the entire market to agree to price. During the speech, you're going to see a lot of price movement, also because of algorithms within different institutions that are going to be trading off of keywords that the Fed is going to say. And to really predict where the market is going to go during this time, it's nearly impossible, right? Because we do not, first of all, no one can predict the future. And second of all, whenever there's volatility, that doesn't give you true price. True price happens whenever there's either a consolidation in the market, because that is when we can see where price is being agreed upon across all investors, right? Because it's just the truth, you know. Nobody knows, right, where price is going to go, and not one person or trader, or even as a retail trader, not one trader can influence the direction of the market. It has to be, we're just little guys here, right? We cannot move the markets with like 500 shares. It's just entirely impossible. So you have to let the big guys play the market out and let price be agreed upon from all of the institutions. So that is what we have for the Qs, right? So currently we're seeing this whipsaw action, pretty much closing or opening or closing where Monday opened, right? So it's really just right in between. This is a current, I would say this is the mean of the market move, right? We have extreme points here down below at 358. If we look at the daily chart, the 6-month time frame, we can see that we are currently at we currently have this level here, an extreme point of 357. This would be a low point here. So if the market decides to trade down to this point, that might cause a systematic sell-off to the market to different key levels of either 350 or even lower. But if the market decides to move higher, we can definitely test this 372 area once again, and possibly cause some sort of breakout price action to take place and eventually move higher to even test this 380 level. So we won't know until this major news flow comes through. Looking at the SPY, right? This is what I thought was pretty amazing to see today. If we look into, well, looking at this weekly chart alone, we had in our previous video, we charted this point here back in August of 2022, creating a high of 431.73, right? The market literally bounced right off of this level here. And this is what I like to see. Whenever I look for some sort of breakout to take place, considering that we're breaking off of this level here, what I like to see in terms of price action for a confirmed breakout is for the market to move up, break past this point here, right? This level here, and then pull back into this level and either consolidate and once again move higher for a confirmed breakout. This is what we can expect to see, but at this moment we do not know. This is only Tuesday, and this weekly candle right here, this is not a complete candle. We'll get the true print come Friday, but as of right now, we do not know where this is going to go. We just need to let the news process through the system of the market and really just agree to a confirmed price. On top of that, we have earnings right around the corner, so that is going to be another possible catalyst to the market, considering the fact that all of Q2 was about tech layoffs, and so this hence the reason why the market rallied, right? Within the second quarter of 2022, and we may see that print of a margin gain within many companies for laying off employees. It sounds bad, but the reality is that's one way a company can reduce expenses. So coming, I want to say somewhere around the first couple weeks of July, that is when we're going to get earnings, and the market may price that in. We've seen a bounce off of this level here, and we may see a move higher if we get good prints on the earning outlooks for possible continued growth. So it's really just a matter of just choosing price levels. And I always like to say this. I always like to emphasize that trading the stock market is really just an auction, and you want to trade off of price. Price is always going to move up and down, and it's just a matter of reducing your risk and finding opportunities where you can get in at a level where risk reward is ideal. Now, looking at the Dow Jones, what we have here, um, what what's really sad to see, but also you can definitely find opportunity in this. But the Dow Jones is currently trading in a range here, right? You can just draw horizontal lines across major points here, extreme points of the current Dow Jones price action, and you can see that it's currently trading in a range, right? And when we see this kind of price action, right, um, it's not good risk reward if you're trading in between. The best thing to do is to trade off of different extreme levels, right? especially if you see a sideways trading market. So with the Dow Jones, we currently have this price here of uh, three $339. It moved up from on Monday's close, and so it's agreeing with the overall market to possibly move higher. However, there are different resistance points that the market needs to trade through on this particular ETF. And right now, we can say that it's currently trading on the upper range of this big horizontal line. So if you want to just stay in this, in a sense, a low volatile ETF, picking levels across these levels within the upper range of this big horizontal line. If you want to get in, you want to make sure that you're trading while considering the possible risk, right? Because as we can see that the Dow Jones within a week, now these are weekly candles, within the week, it can sell off pretty hard. So if you decide to trade the Dow Jones, you want to make sure that you're considering the risk, right? At the same time, even if it tests these levels, because of its strong horizontal price action, you absolutely do not want to be buying at the top. If it breaks through, like this, so whenever you're trading a sideways price action, you do not want to be considering possible breakouts. If it breaks out, good. You know, let the price move higher and retest the breakout for a possible support. And so that is what we have for the Dow Jones. Now looking at the VIX. Looking at the VIX, uh, closing down 3%. What we have here is very interesting. Now we're looking at the weekly chart. We've already hit the lowest point in quite a while. The lowest point being 1273. That's pretty low. For a while, it was kind of trading and hugging this range here. We could actually draw a box here. This was a former support level, and finally the VIX broke through on the backs that there was no risk in the market. Right, the VIX likes to trade off of uncertainty, and right now many investors, especially the big hedge funds, even though like it's kind of funny, you hear it all over CNBC, a possible bear market, a bear market to come, but they're talking out of their mouth, but on the other end, right, they're moving the markets, and we can clearly see that they are in on the market higher. And so we can see that with the VIX, with a huge sell-off in the VIX, right? Considering basically, telling us the story that there's really no risk in the market at all. But at the same time, right, we don't want to be naive to the fact that when there is unperceived risk, that is when risk actually exists, right? So we want to make sure that uh, unperceived risk is when the market goes euphoric, and we do not want to get trapped in those moments. So right now the VIX is trading down and it's looking pretty good. Looking at the daily chart, we can see that yeah, it's let's see, let's remove this box here. We can see that it's currently trading in a range. Uh, and I want to say that we are currently at a point, right? If we zoom in a little closer, we are currently at a point where we have a possible head, we have a small shoulder, and if we continue to see price action, play out, we might get another shoulder. And so this is a reverse head and shoulder, suggesting that the market may be setting up for a pop in the VIX, and with a pop in the VIX would mean that the market sells off. So this is just playing things out, looking ahead, putting in assumptions in the market. But again, we have to remember that all these things that I'm saying right now is just assumptions. What we have to do as traders is to understand where price is moving and understand that whenever we are trading, we want to consider the possible risk, right? So the best thing to do is figure out levels in the market and trade off of those levels and entering your position knowing what risk you're deciding to take on. So if you like these videos, please make sure you go ahead and subscribe to the channel and leave a like with the like button below, and we'll see you on the next one.